Hello, everyone. This is Justin Muscolino, CEO of Tweezzle, and welcome to discussion on proposals for mortgage service providers. Today, we have two special people with us, Pam Purdue and Bob Brown, and also advisors at Tweezzle. So today, we're going to go through two separate mortgage service provider proposals from the CFPB and the FHFA. So Bob, Pam, welcome. Great to have you aboard today.
Thanks, Justin. It's been an interesting week filled with activity. I know when we talked about these two topics the last time, they were just in a proposal stage, but they have been finalized, and there are some interesting differences between these two items. So we want to highlight those. We want to build upon what we talked about last time. And Bob, I know you've done some digging into things like the timing differences, the different considerations that mortgage servicers, some may be bound by both of these rules, and others may have to only think about one, depending on what their portfolios look like. So I'll turn it over to you to get us up to speed on some of the particulars.
Thank you, Pam. So the Fannie Mae product and the Freddie Mac product were released simultaneously a couple days ago. The Fannie Mae product is called Refi Now. Its effective date is June 5th of this year, so in about 30 days. The loans may be underwritten using DU or manually if otherwise eligible. And then you can have either your normal connection to Fannie or you can use your API connection. In Freddie Mac's case, their product is called Freddie Mac Refi Possible. The effective date is not until August 30 of this year, so a day before the CFPB proposal is expected to kick in. And the loans may be underwritten using their loan product advisor or manually if otherwise eligible. Other than that, both of the documents appear to be very consistent with what the FHFA proposed last week. Justin, back to you.
All right, so it is expected that the loan modification will be very popular, just like the PPPs. Who doesn't like free money?
There are some high-level factors that folks will need to consider as they look at the comparison between these two. So there is a little bit of a timing mismatch, as you can see, and that is really going to cause you to have to make some decisions about whether you want to start doing things a little early, whether you want to wait until they're actually effective. And with these new programs, a lot of times you can't do the aspects of the tech testing or any of that ahead of time, but you've still got to get your folks ready. So those timing mismatches are something that you're going to have to figure out how to deal with. You're also going to have some customers who aren't covered by either one of these programs. You know, I thought it was a pretty clever naming to call one Refi Now and the other Refi Possible. But you're also going to have customers who don't fit into either of those buckets, and they may get a little concerned to say, well, what's for me? You know, if I fit this criteria, I could get some help. And if I fit this criteria, I wouldn't need any help. But I'm sort of squeezed in the middle between those two things. And I think it's important to keep in mind, you are going to still need to have a plan for those customers who don't fit, because they may still need some of your support and assistance in this regard. So not doing that, or not doing it consistently, not communicating all these standards effectively, you could find yourself pretty easily and quickly, not only in regulatory hot water, but with a lot of disgruntled customers. And what do disgruntled customers do? They go complain to their regulator, or they find a plaintiff's attorney. And we also don't want to forget, both Bob and I have had a lot of experience with these situations where a lot of times plaintiff's attorneys will go find plaintiffs. You don't even really have to, you know, these are going to be big areas where a lot of activity. It's going to look a lot like it did after the Great Recession. So you want to be mindful of those. And on that theme of consistency, before I turn it back to Bob for some other tech and other details, being able to communicate with your internal team so that everybody in the organization at all levels has at least an awareness of these programs. You don't want somebody having a casual conversation over lunch with a friend, or just being out in the community somewhere and somebody says, hey, what about those two programs that we heard about on the news? Because they probably will be pretty well publicized. So you want to make sure that everybody from your board on down all the way through all the frontline people have an awareness that these things are happening and know where to direct inquiries about them. Bob, when you and I talked about this offline, you had some other thoughts around staffing concerns and tech concerns and how you really start to ramp up for these rules.
As we all emerge from a post-COVID environment and start moving people back into our offices, we're going to have to change all the paradigms that we've been utilizing for the last 18 months. Probably one of the biggest one of those is training. In many banks and servicers, training has not been something that we spent a lot of time on because we're just trying to get the job done over the last 18 months. But for these two programs, we're going to need to get ready to handle different rules and different regulations, and our people are going to need to know what the options are under each program. We're going to have to staff up in many cases and hire new people and get them trained. We're going to have to identify new technologies that, Justin used the example of the PPP. Many banks went to a manual operation because they didn't take the time to install new technologies. But now's a good time when you've got 60, 90 days to get ready to look at installing new types of technologies to make the productivity of your people increase. We're going to have to be able to monitor the workload in an environment where some of the people are working from the office and some of the people are still working remote from home. And we're going to have to make sure that we don't overload any of our employees. So Justin, back to you.
Another issue or possible issue is customer service related issues. Now, Bob, do you foresee any customer service related issues that are coming about?
Certainly, there will be multiple programs here with multiple very complex conditions. And the consumer is going to get most of their preliminary education through the social media and the news media on television and through just the rumor mill. And so you're going to have good customer communications that tightly describe what your program is and make sure your customers understand their eligibility and that your employees can be consistent in explaining their eligibility. One of the biggest problems I think we're going to have here is a difference in timing. Many of the servicers will either be connected to Fannie or they'll be connected to Freddie, but they may not be connected to both. If you're a Fannie customer, you're going to kick off on June 5th. If you're a Freddie customer, the bank or servicer won't kick off until August 30. And so for 90 days, we're going to see a window here where some banks are processing these loan modifications and others aren't. And there's going to be a communication gap as to why can I not get my loan modified in July when my servicer is a Freddie Mac provider. So that's something you're going to need to be able to clearly communicate to your people so they can clearly communicate to the customer and make sure that they're not trying to answer these questions ad hoc. Customer expectations will be much different in these cases than the reality. We saw that in the PPP, that many of the customers believe that this is now a right or a privilege, and that as soon as the government announces these programs that they're eligible for them. And they have to understand that there's going to be a delay time. And just telling the customer you just have to wait is probably not the right answer. Back to you.
Thank you, Bob. Yes, customer service, it could definitely be an issue if the training communications slow down and everybody's on the same page. But transitioning a little bit from potential customer service issues are compliance. So Pam, do you foresee any compliance related issues with these proposals?
Well, here's what I'll say. You can't go within 1,000 feet of a mortgage without having compliance issues. So I think in terms of how these programs behave and how they operate, there are a couple of things to keep in mind as you work through what you're going to do with these. Let's not forget that these programs do still have eligibility standards, and you're going to have to compare those eligibility standards to your own institutional standards and make sure that you've got those requirements mapped appropriately. So that's the first thing, is understand the down and dirty nitty-gritty details of those programs. Secondarily, as you start to shape your communications processes, you want to invoke that consistency. You want to make sure that no matter what delivery channel I'm coming in to your institution to inquire about these, you also may have to decide whether you're going to do any proactive outreach to the customer base that's eligible, so that you start to get out ahead of the curve. And that may be a way to curtail some of the communication challenges that we all expect are going to happen as word of these programs hits the popular media. You're still going to have, here's the thing. It's always the 3 Ps: a plan, a program, and a process. And you've got to make sure at each one of those steps along the way that we've got a compliant scenario. You will have to do that deep dive. And that's the other piece that we often forget. I still have to dig in here and read exactly what these rules say. And if Bob and I went into all those details in a Tweezzle Talk episode, it wouldn't be very fun for anybody. But I'm sure that we'll have a Tweezzler or some other kind of deep dive look at this for the compliance practitioner. So, the other things to keep in mind, I think we'll kind of save that for the risk frameworks. But clearly, fair lending, anti-discrimination, predatory lending, that's always lurking in the back of our minds as we build these large-scale compliance programs.
Thank you, Pam. Love listening to your insight when it comes to compliance possibilities or issues in this regard. Bob, your insight as well on the operational issues will definitely lend another angle to this equation. What do you foresee as far as operational issues with these proposals?
I think the first thing to remember is that this is not replacing your existing workload. This is on top of your existing workload. Again, much like PPP. So your staff is still going to have to do their day job, but they're now also going to have to do this workload. We're estimating that the number of loan modifications could exceed 20 million loan modifications nationwide. Every banker I talk to complains about their staff experiencing burnout over the last 18 months. So this is something we really need to watch. Technology is perhaps one answer. There are solutions out there that can help you address this and eliminate some of the manual activities that some of your team may have to accomplish today. Under the PPP, many people made the excuse, we don't have time to upgrade our technology, so they just threw bodies at the problem. You need to do a better job of monitoring, analyzing, and reporting the data about this program. All of the agencies are looking for you to be aggressive in addressing the situation with your customers. The standards established by the FHFA is that you need to be robust in your activities trying to process these loans. Good project management will be important here. Many times under the PPP, that was a secondary thought. The speed of customer service is one of the issues that the CFPB has highlighted in their discussion of this issue. They expect the banks, the servicers, to be very responsive to their customers. Allowing customers to be on hold for hours at a time is not acceptable. Failing to respond to the customers is not acceptable. So you need to have a way to monitor the quality of the service that you're providing to your customer. And you need to come up with exception handling processes and get those documented and make sure they're consistent across all groups, including ethnic groups. You need to make sure that the quality of your service is also consistent service. Back to you, Justin.
Thank you very much, Bob. Now, in regards to financial institutions doing the appropriate analysis on the different proposals, Pam, are there regulatory considerations they should take into account?
Just as with any other compliance requirement, government program, any specialized set of rules that we have to deal with, we find in these large scale programs that benefit a wide swath of citizens and borrowers, that there is a greater propensity for fraud. So you're going to have to look and see, develop systems to account for that, make sure that you're able to detect when some of these requests might be fraudulently inbound, and also have a process in place for reporting those for BSA AML purposes if they rise to a level that merits that reporting. We are also going to have to think about the adequacy and accuracy and timeliness of the disclosures that accompany these programs. As Bob mentioned, because you're going to have to either rapidly staff up or rely on third parties to help you do this stuff, you're going to have some mechanism for assuring that the disclosures that accompany these refinances are going to happen timely, accurately, and completely. The other thing that we see a lot of times when we have large scale programs is there is a bit more of assertiveness, I think, on the part of the borrower, and especially for folks who did live through the Great Recession. We may have some folks who had trouble then who are now, they're seeing a repeat of the circumstances in their own life situation. And I think that consumers have become better educated over the past decade, thanks to financial literacy programs that have been in place, but also thanks to, the formation of the CFPB. They have done a lot of work toward community outreach and making it clear to the general public that there is an agency that's there to protect them. So I think we could also see what I would call emboldened and empowered consumers who understand these rules a bit better, but also understand how they can advocate for themselves and how they can push the envelope a little bit to benefit their personal situation. Now, some people will do that with a lot of ethics and integrity, and there may be some who will do it with not very many ethics and integrity. So I think it's important to keep in mind that you're going to have to really be on the lookout for the consistent administration of these rules. And then last but not least, as you're trying to figure out how you address these regulatory risks, you've got to keep in mind fair lending and predatory lending. We've seen a lot of enforcement in these areas. The Department of Justice has indicated that they're going to ramp up enforcement in these areas. It will look very similar to the structure that we had in the Obama administration, where this is a focal point. And I think the social and political conditions in the US are supportive of those efforts. So you are going to have to find ways to track and I will say defend your practices, whether you're doing that to the public, the media, regulators, or individual consumers and their attorneys. So a lot to consider in a short amount of time.
To really drive this home, what other possible issues do you guys foresee? I'll start with you, Bob, on this one.
I think we got to watch out for the media, whether it be print media or over-the-air TV. Under the PPP, there was a lot of misreporting, and then the banks had to deal with this. The banks need to get in front of this problem and make sure they're clearly communicating the message with all the appropriate regulatory disclosures up front and clearly identify what options are available to individual customers. We've also got to make sure that we've got some type of capability that if the GSE systems crash, that we've got some way to continue processing and not rely on our people to have to work long, extensive hours on an overtime basis to catch up when the GSE systems came back up again. We saw a lot of this in the early phases of the SBA program with the PPP, and we should probably expect that there may be similar situations with Fannie and Freddie. Pam?
Yeah, the couple of other things that I'll mention there, and I'm glad that you pointed that out about, the systems probably not being ready. We also be mindful that, banks and other kinds of servicers probably handle these things very differently from one another. And I was surprised when I went over into the tech part of our industry to discover that there's still a lot of mom and pop style mortgage, not just brokers, but mortgage servicers as well. They keep their loans in portfolio. And oftentimes these regulatory requirements have a hard time reaching that segment of the industry. So you may be dealing with customers who their neighbor is dealing with a different kind of servicing entity, and they hear that they're getting treated one way, but it's under the same program ostensibly that the person who's communicating with their neighbor is being treated differently. So I think that's something to keep in mind also is if you have ears to the ground, trying to understand how your competition are dealing with some of these communications initiatives is important as well. There will probably be, as you said, Bob, a lot of social media activity around these issues, both from official media channels, but also from the general public. And so it's another place where your marketing programs have to be ready to survey the market space, understand what's being said out there and where the sentiments are. That's another great place where you can deploy some technology solutions, to monitor those social media spaces. So I think we've got to work smart, hard, and fast to get ourselves ready for these changes.
Bob, Pam, this has been excellent. Thank you so much for joining us today on Tweezzle Talk TV. And for everybody out there, thanks as well for joining us. And look for other great content on tweezzle.com. Have a great day.